Amit Jeswani from STALLION Asset is here with us to talk about markets. A very interesting juncture in the market for stock pickers, for navigators of small cap, mid cap storms, as Amit has been for years. But before I talk to you about the markets, Amit, let me congratulate you. You are donning a new hat now, and that is a hat of a young father, a daddy. Congratulations on your parenthood to you and your spouse. I'm sure, and I wish that your son also becomes a better fund manager than his father in years and decades to come.
Thank you so much, Ajaya. It feels great.
Well,
at least on the personal side.
Don't be so happy. There will be scores of sleepless nights when you'll have to do your daddy duty at night and fund manager duty in the daytime. So you'll have to negotiate with sleep and hard work. But going forward, how are you? Were you enamored by a lot of phone calls from your clients last evening when the small cap, mid cap actually started melting? And what was the experience like last evening? Or was their client universe much more mature this time? It barely happened, and no follow-up selling also today.
So Ajay, typically our clients are very long-term in nature, and they don't call us for very small 2% kind of moves. Our alphas till yesterday were north of 20%. So they've had a very decent, we've had a decent 2023 till now. And I'm not, I believe that the game is still there, and the bull market continues. You'll see newer highs. There might be some consolidation, which is very normal. The small cap and mid cap index in the last 4 months has gone up 40-50%. And it's very normal to see 1 month, 2 months of small corrections. But this is not the top. I won't say that this is, it doesn't look to me like the top. Of course, there'll be sector rotations. The stocks, there was a lot of junk that was rallying. That junk plays will probably correct and not move again. But overall, the market trends is very strong. And this doesn't look to me, when I see the earnings growth for next 1-2 years, I don't see the market stopping. This is not the market top. According to me, I can be wrong, of course.
About some of the spaces which you like. There's a new company in town that is Red Tape in the listed space because it got created. Pull up the Red Tape stock price for reference check. It got created by getting demerged from Mirza International, and it's a company of my hometown back in Lucknow, Kanpur. Very good brand recall, Red Tape. You seem to be liking it too. I want to understand the business, not the stock price, etc., but the business of Red Tape. Branded shoes and the new gen, the millennial shoe consumption pattern. How big can it become in next few years, and why do you like it?
So first of all, these are not recommendations, and we at Stallion, we're a SEBI registered PMS and a research analyst company. Whatever I speak, I might have vested interest. I can tell you in Red Tape, we do have a vested interest. Ajaya, Red Tape, 73% of shoe market in India is unorganized. Red Tape revenues last year were 1450 crores. Red Tape every year for last 7-8 years, 10 years back, Red Tape revenues was 100 crores. That is in 2013. And from 100 crores, Red Tape has moved to 1450 crores in last 10 years. It's grown faster than your Campus. It's grown faster than Relaxo. Its ROICs are higher than Campus, Relaxo, and it trades at valuations which are 1/3 of Campus and Relaxo. And this quarter also, which went by, the growth of Red Tape was 30%. It was a no-brainer when it demerged, when the demerger of Mirza and Red Tape was happening. We made a decent killing here. But I strongly believe that there is more to go. We own a decent chunk of the company. Since there are disclaimers coming out, we might have crossed 1% stake of Red Tape. I don't know how much stake we have, but we have a large quantity of Red Tape. But it's probably closer to 1% stake, just for disclaimer purposes. And I strongly expect that my bet is on Suja Mirza, and he's an executor. He's even after COVID, the growth has been 30% odd. So for 35-40% ROE, the profits have crossed 100 crores. Last year, profits were 135 crores. This year, profits can be 180-200 crores. I believe the game is just getting started. And once in consumer companies, Ajaya, you cross 100 crore profit mark, I'm telling you, the next 3, 4, 5 years, typically you end up moving to 500 crores. That's the pattern in all consumer companies. So this is what I expect in red tape also. But we will hold the stock till the time there is execution. If there is no execution, we of course at Stallion we have better choices. We move out.
Right, a fair point. I understand that point. How are you looking at organized retail, especially in the light of increasing preference of the Gen Z, the millennials, to shop online? Because there are some companies in our listed space which actually are going in a hybrid format. Shopper Stop, for example, they are expanding on both the angles. Trent is a very big value creator last few years, but has more stronghold on brick and mortar. And how do you compare the valuations of these two, Trent versus Shopper Stop?
Trent, see, the first comparison is who's executing, who's not executing. Trent this quarter grew at 50% plus. Shopper Stop same quarter grows at 7-8%. There is no comparison between a Trent and Shopper Stop. The only good thing that Shopper Stop had was Venu, who was the CEO of ex-CEO of Trent, who joined Shopper Stop, and now that is also gone. I believe it's a complete blue ocean in which Trent is. Trent's revenues this year will be north of 11,000 crores, and the game is just getting. See, Ajay, above the 1 lakh crore market cap, there are 57 companies. And out of those 57 companies, secular 20% growth is there only in 3-4 companies, which is your ICICI Bank, Bajaj Finance. I'm speaking about the 1 lakh crore plus market cap companies. 57 companies are there, and secular 20% growth is there in your Varun Beverages, your probably Titan, Bajaj Finance, and DMart. And now there are multiple companies in that 50,000 to 1 lakh crore market cap basket. Companies like probably Polycab, companies like Trent, which is at 70,000 crores market cap. And these are going to be the new normal nifty companies. And because these are companies, see, when Apple, Google, Facebook, all these companies became large because they were growing at 30%. And when you're looking at the top 100 companies, assuming you want to move to large caps, and that's the whole thing, you want to still buy growth, right? You won't move for 15% or 12% growth. So I'm very confident that 50,000 to 1 lakh crore market cap range. Look at this. This is where the $10 billion market caps are there. The profits are 1,000-1,500 crores. And many of these companies will post 5, 7, 8,000 crores. That includes companies like Indigo Airlines. Market cap today is 80-90,000 crores. The profits this year, which brokerages are estimating, are 7-8,000 crores. The stock is at 10 PE FY24, and it's a market leader, gaining market share every year. So these are the kind of companies that what will be the new Nifty, you have to think, because in Nifty or the top 50 companies, the growth is very slow for us.
Okay. I distinctly remember, Amit, that, we were discussing Polycab years back when it was just about to get listed or just got listed. The kind of numbers they had, their profit on a yearly basis is now equaling what they're doing on a quarterly basis. So I must congratulate you. You were way ahead of the curve in understanding the potential of Polycab. I'm sure you have an opinion on RR Kabel as well, because you've studied this space.
So we maybe just be meeting the management. So after that, we'll be in a better position. We met a management of a smaller company called Paramount Communications last week at Stallion office. But we'll try and see this space. If you hear, just one important disclaimer, we might manage money for the promoters of the family also, the Polycab family. But of course, we don't speak to them. But about the cable industry as a whole, I can tell you KEI in the con call said that they don't have any capacity left. US, which is a $250 billion market. The worldwide wire and cable market is $250 billion. US is $50 billion out of that. And Inder Bhai, the man, he's a one-man show who runs the Polycab business. He's like Sanjay Gupta of APL Apollo, Rajiv Jain of Bajaj Finance. He's in that category of execution basket, I would say. He targeted that Polycab will be the 5th largest company in the world in wires and cables. So you have to just keep. Last quarter, it grew at 50% volumes. These are very large numbers on very large basis. Like I spoke about VBL also, Ravi Jaipuria, the kind of scale up that VBL does you want to be with these guys and you want to ride their execution. And wherever there is good execution, you will find in consumer facing businesses and who are market leaders, you probably will find us in that stock.
All right, Amit, we'll let you go on that one. Thanks so much for your time. Always wonderful to chat with you and understand why you're betting on names and the ones you are betting on. But our catching up is long due, and we'll do it one of these days.
Thank you, Ajay. Bye.
Look forward.